Hello, everybody. Welcome to the Sunday live stream. And I am joined by my favorite guest, Jerry V. Hall, who is coming back to make sense of the situation. What's happening, Jerry? How are you?
Hello, everyone. Pura vida from Costa Rica.
Yes, Costa Rica. I got to visit there one of these days. So everybody, if you're not following Jerry, it's a simple, easy follow. And I linked this in the description. You can check it out and just follow Jerry. He's got some really great insights because he's been around for quite some time. But today, Jerry, what I want to talk to you about, and I want you to talk to everybody about, which is it was an piece of information about 28 years ago, which is it's repeating almost to a T the same thing today. And just for posterity, I want to make sure that everybody knows, like as they watch this video in the weeks or months or even years to come, this is the price of Bitcoin. It's 107,733, and we've been kind of chopping back and forth. We were almost at World War III roughly a week ago, right? And now everything's going great. Maybe there's some tariff talk. There's things about talking about a soft landing, all the things we're going to see again. But this is where we're at for the market cap of $3.4 trillion. And who said all these things 20 years ago? Was this rather unknown gentleman by the name of Peter Lynch. This is all you need to know about the markets. What he's going to tell you in the next really 6 minutes, 5 minutes, I should say, is everything you need to know. First of all, let's talk about who Peter Lynch is. He is, now he's 81 years old. And for those who are questioning, yes, he is still alive. And he is, or was, the manager of the, or maybe still is, of the Magellan Fund at Fidelity Investments. No, was between 1977 and 1990. Lynch averaged a almost 30% annual return, which is more than double the S&P 500 stock market index, making it the best performing mutual fund in the world. And you would think somebody with that good of a track record, you'd think to yourself, okay, this guy has to know everything. He has to know everything that's going on in the markets. He has to, have just a ton of quants. He has to have a ton of models and do those stuff. No, he doesn't. I just listen to this. This is a 30-second clip. Let me make sure. Let's see. No. I want you to make sure you guys hear this perfectly. Let me share the tab. There we go. Listen to this. This is about 34 seconds, matter of fact. And I forgive the audio. It's C-SPAN from 28 years ago, so good luck. All right, take a listen.
85, they said we have a recession. 86, 87, something happened in October 87. I forget what something happened in October 87. Celtics lost 7 in a row. Something bad with 87. They said for sure we'll have a recession 88. And they said 89 for sure we'll have a recession. And then 90, we're supposed to have the so-called soft landing, which we never had. So I've always said if you spend 13 minutes a year on economics, you've wasted 10 minutes. And all you need to know about the stock market is it goes up and it goes down. And it goes down a lot. And that's all you need to know.
That's all you need to know. So that's just the first 30 seconds. The next one's about 3 minutes. And it's great information. But Jerry, what do you think about what Peter just said?
I think crypto has brought a lot of people into the investing world through the portal of trading. And they are two completely different things. And it's important for us to understand that what Mr. Lynch is referring to is being an investor, not being a trader. I think that's a very key point.
All right. Very key point. And of course, there's a lot of traders out there, and I get you. And I respect every trader out there that is trying to make this way. That's not my thing. But at some point, we all have to trade some of our positions, unless we're going to hold it forever. That's up to you. So that was the first 30 seconds or so. And for this one, this is about 2-3 minutes, and he's going to go into more detail. And when he's saying these things in 1997, I want you to think about what is being said recently. What have you heard on Twitter or X? What have you been hearing in YouTube? What have you been hearing in the different videos and things that you've heard? It's the same thing recycling over and over again. People get stressed out and they try to be aware of every single thing out there, and you can't. And then it's going to look, when you look back at some of your positions, like, how the hell did I get there? Anyhow, without further ado, let me let you listen to this. Again, this might not be the greatest audio, but we'll see where we go. 2 minutes, 2.5 minutes or so.
The stomach. That's the key organ in the body. There's always something to worry about. In the 50s, it was depression and nuclear war. The 50s was the best decade of the century. Except for the 80s. only slightly better. The A's are only slightly better. People didn't expect a lot. We had an okay, it wasn't a great decade. They just didn't expect much. We made it through. And stock market was terrific. Do you remember when oil went from 4 to 40? Remember that period?
Oil
Oil went from 4 to 40, and the experts said it was going to go to 100, and all the countries of the world were going to go bankrupt. And then the big banks are going to go bankrupt, and we're going to have a Great Depression, and the stock market's going down, and you're going to wind up selling pencils and apples. So oil went from 4 to 40, and the experts said it was going to go to 100. Within 2 years, oil was at 14. The experts, now much higher paid at this point, are saying it's going to go to 4, and we're going to have a depression. And people believed it again. I remember when the money supply was growing too fast, they said we're going to have a depression. It was growing too slow, we're going to have a depression. Remember the LDC debt? All the banks, our banks were very smart. They lent all their net worth to Zimbabwe and Botswana and Botswana and all these countries, Chile, a lot of countries I can't pronounce. There's Chase Manhattan and Chemical and Manufacturers Hanover. These countries weren't doing so well. Then they were called undeveloped countries or less developed countries. Now you have to call them emerging countries. It's not politically correct to call anybody an undeveloped country. It's like I just found out the other day the term for somebody that's overweight is laterally challenged. You have to say laterally challenged. Yeah, but these were LDC debt. They were all going to go bankrupt, and we're going to have a depression. Then the Mideast was going to the world. Remember that one? The Mideast was going to the world. They weren't going to buy our bonds, and market crash, and we're going to have a depression. And Japan was going to the world. Remember that one? Japan was going to have all the assets, and they weren't going to buy our bonds, and we're going to have a depression. Within 3 years, the Nikkei Dow had gone from 40,000 to 16,000. The banking system was in trouble, and people said Japan was going to collapse, and we're going to have a depression. So I have no idea when the market's going to go down, and no idea when it's going to go up. I'm totally shocked. The market was 4,5 years ago. And a while ago, it's 8,000. I had no idea about this. Very surprising to me. But I'll guarantee you the market will be a lot higher in 15 years. It'll be a lot higher in 25 years. What it's going to do in the next 1 or 2 years, I don't have any idea.
And he goes on. But I linked in the description that full video. You can watch it for yourself. But again, when he talks about those things, and he said, and remember who this guy was or is. He averaged 29.2% annual return, more than double the S&P 500. And he's telling you right there. He was like, I don't know what's going to happen next year or two. I just know that if you stick around, things are going to do pretty well. It's great advice, especially as we chop sideways. Jerry, what are your thoughts on this one?
Well, my thoughts are, what an incredible track record, considering that he was crushing the market prior to the internet, right? The internet was a huge wealth creation monster for, some companies. And obviously prior to digital assets, right? 30% when the market was averaging 10, that's big. And he did it from, he's well publicized. He understood growth markets, right? When he was in that speech, he was talking about emerging markets. He understood the raw material game, right? Rare earth metals, and understanding how they were going to play a part in new technologies as the internet age was kind of maturing, starting to come to, I don't want to say common understanding, but in 1990, a lot of people did understand where it was going. Not necessarily me, but people who were much better positioned to invest. But he had done all that before that. Just an incredible man. A lot there to learn from.
Yeah, I would say so. Yeah. So that was, it's just something that we like to bring up every so often. We've talked about actually that video that I just played. That was from August 2022 when I reviewed that one. And I'm sure 10 years prior to that, 2012, I'm sure somebody reviewed that video. And then back to 1997, I'm sure when it came out, people were like, that's totally right. And now here we are again playing in the same loop. So anyhow, I just want to give everybody a little bit of brevity, a little bit of breathing room to say, yes, we're not doing, we're kind of chopping sideways. Yes, it's boring. Yes, altcoin season isn't here. But look over the last year or two, as far as Bitcoin and some certain alts, we're doing pretty good. So just a little reminder, nobody knows where things are going. Just stick around, be like Peter Lynch. That's pretty much the big thing.
Can I throw in one thing, a bit of context?
Sure.
So in 1997 is when I got hired by Chase Manhattan as a loan officer. And I'll never forget, that the world was wishing, right, praying for 5% 30-year fixed mortgages, right? So we're in that 9, 8, 7 and kind of coming down. The world had not seen interest rates that low like ever, right? And now here we are, some darn near 20 years later, almost 30 years later, sorry. And 5% is high.
5% is high.
5% is high, not low, high.
High.
And
Wow.
so what I think what's important to take away from that is that the world has changed this growth through productivity to growth through debt.
Mm-hmm.
That's super, super important to understand. If you don't understand that game, and I know we'll get into it later when we talk about stable coins and bond issuance and things of that nature, understanding debt is going to be super important for all of us who want to continue to profit as we move forward.
Oh yeah, in America, we got a lot of that. I want to say, what, 340 trillion, somewhere around there? I forget. Correct me in the comments section. But let's talk about this. We're talking about debt. We need to talk about bonds and treasuries and things like that. This is a great post from Tom Lee. If you haven't seen Tom Lee, usually is on MSNBC. He's a perma bull on mostly Bitcoin, but I mean, as far as like crypto assets go, and also he's in traditional finance. But he made a great post, and I shared this with Jerry to have him look it over. And even Jerry was talking about like, wow, I didn't realize this big thing. So I'm going to read these first two. It's actually a 10-post series. And Tom gets it. And we've been talking a lot about this on the channel, which is stable coins. Yes, true, you can't get rich on stable coins, although Jerry's got an idea about that. But it's which chains are stable coins being built on. We all know USDC and USDT is the lion's share at 91 to 93% of all transactions as far as like with stable coins. Then you have to look at which are the top chains. The top chains are, I'll just tell you right now, and we can actually go through this on the Visa Analytics, but it is Solana, Ethereum, and not in any particular order, sorry. Solana, Ethereum, BNB, Tron. And there's some layer twos like Polygon, which is sucking right now as far as price action. But those are the big winners, quite honestly. But what Tom says here is stablecoins are the singular most successful crypto product and the only one to move into the real world with $250 billion in total assets. Now, some people in the comments are going to say, but Rob, what about real world assets and NFTs and the different things that we do with crypto? That's true, we do, but not to the tune of $250 billion. That is a quarter, when my math is correct, that is a quarter of $1 trillion, which is looking pretty good. And then he says, issuers of stable coins generate significant profits as the collateral can earn yield, and this is not paid to holders of the stable coin yet. This was the post, I think, that got Jerry's wheels turning. Jerry, talk to us about this.
So the idea of holding a stable coin for you and me is transactional, right? We get no benefit from holding that stable coin unless you're doing some kind of thing like you hold it on Coinbase and trying to get that 4% yield that Coinbase will give you if you park your USDC there.
Yeah.
But in the normal situations, in our normal self-custody situations, there is no yield component, right? It is strictly transactional. But the issuer of that stable coin, when they mint it, if they take your dollar, they mint it, and they take that dollar and put it into a U.S. Treasury bond and yield 3.5% or 4%, or some secondary bond market to get 5% or 5.5%. Now, all of a sudden, they're producing a yield on the dollar. You and I aren't. You and I will benefit if we own the underlying asset, the chain, like for instance, Tron. Tron is used in the minting of the USDT. We don't benefit from the USDT per se, but we will benefit from owning the Tron, right? You see as more Tron is being issued to mint these stable coins, you get a price appreciation in the underlying asset. That is such a different, you won't find that in a fixed income market, right? That's, you buy a bond, you get the straight yield from the bond. I mean, that's it. And then you have to account for the time collapse of the money, right? The inflation rate of the empty monetary supply degrading the underlying asset. So you and me, bonds are not necessarily a good investment. Matter of fact, they're a horrible investment. But they're great for these stablecoin companies because they're backing their mint with a yield producing global asset that the asset itself can't generate that yield. It's really a fascinating game, and one that brought a layer of respectability for me to the stablecoin market, not to mention all the stuff that's going to happen with adoption, right? The more stablecoins get adopted, the higher the velocity of money. We understand through economics, when I earn $1 and spend it with you, and then you've taken what you've earned from me and spend it, we're creating that gross domestic product. We all want productivity to go up. These are elements that support that. Fascinating stuff. And thank you for sharing that post, because I wasn't really thinking about it from that perspective. I was only thinking about what it will do for me.
That's how I think too, Jerry. I must admit, what's in it for me? So, God, that was a great take. I love it. So, like what Jerry was, just going forward for this post and to finish it off, it's, people will say, well, why even? I mean, as I always, and I talk about this a lot. I always look through every different transaction and every different chain through the eyes of an American. So I don't really see it like globally. I'm like, why the hell do we really need stable coins? Because I just whip out my debit or credit card, or I pay with Venmo or Zelle or whatever else. But it's not just about that. It's about merchants. Merchants, I mean, every restaurant, bar, place you go to buy something and you're paying with your debit or credit card, they're getting stuck with that bill, 1.99% to 2.99%, 30 cents per transaction fee if you're talking about PayPal, Visa, MasterCard. But also there's this thing called chargebacks. Merchants like stable coins. Merchants like stable coins. The lower transaction cost because it's, it's nothing. It's not 3%, 1%, 0. It's really super low. And this is why Visa is tracking it. They're tracking all these transactions because they don't want to become obsolete. But they say chargebacks are also a problem. People go on there and be like, I want this and that. I don't want that. And then they have to charge a 5 to 6% transaction fee, which pretty sucks. Bonus, there's a large untapped market of users who do not use credit cards. Again, I'm always looking through things as an American. I got to realize that there's other countries out there. It's true. It is what I am. In fact, 80% of U.S. stablecoin volume is outside the United States. And then answer your question like we've always done, which is, well, which one should I be looking at? Well, this is all the stablecoin transaction count. As of June 2025, so far, wow, Binance Smart Chain, 160 million. That's huge. And then comes Tron at 39 million, then Solana 11.7, then Polygon, which is pretty good, 9.4. Base, Arbitrum, Ethereum down the line. But that's just, what is that? That's transaction count. What about the transaction size? This is it. Stablecoin transaction volume. Now who's the king? That's Tron at 256 billion, Ethereum, Binance, Solana, Base. Again, the same players. So now you wonder to yourself, why the hell has Justin Sun been everywhere, especially with the Trumps and moving around? First of all, he's a hellacious marketer. I know some people hate him because they say he ripped off Ethereum and he totally copied it for Tron. Yeah, probably. But here he is with his banana art piece there with Eric Trump, and he's been everywhere, especially as one of the big holders of Donald Trump. Jerry, real quick, if you're a stablecoin holder, what do you have to back your stablecoins with?
I'm not backing them with anything. The issuer is backing them with something. And so if it's Tron, I'm hoping he's backing it with U.S. Treasuries, right? At least there will always be a guaranteed buyer of that treasury, and that is the Federal Reserve, right? Yes. And so that's that part we kind of count on. That's that risk-free element in a way, right? We can enter that risk-free, knowing that there's always going to be a buyer of last resort. Here's the part that I don't think Tom gets into very much, but something I learned firsthand when I went and visited Argentina, and that is how valuable the U.S. dollar is outside the U.S., right? Anytime country whose monetary policy is even worse than the US, which there are many, now all of a sudden the dollar is preferred over the national currency. So in the case of Argentina, the dollar is not preferred over the peso. I mean, there's no question. And so now all of a sudden, if you're earning pesos and you can convert to dollars, it's kind of like how you and I take our dollars and convert to Bitcoin.
Yeah.
Right. We're converting into a higher level, higher quality asset. Right. And if enough, the stablecoin market allows the world to play that game. So as countries' currencies are weaker than the dollar becomes the preferred currency. Now, all of a sudden, that strengthens America, because if these dollars are backed by U.S. debt, now all of a sudden our debt can expand, which we know we love doing that.
We love it.
And now all of a sudden you've got the world. It's no different than the fractional reserve banking scheme. What we used to call the euro dollar happened outside of the U.S. as countries were issuing dollars for debt. It just makes the dollar stronger.
Yep.
Right. And strengthening the dollar is important for like people like Trump and people like our debt market and things of that nature.
Yeah, exactly. And so just circling back to the beginning, this is why, like, when people say, like, why is, Justin Sun worming his way in? How is he able to do that? It's because the current administration looks at that and says, oh, you want to back this by Treasuries? That's great for us. Let's do it. And because usually with stablecoins, you have to back it with something, not obviously me and Jerry or you, but they got to back it by something. And they're going to do it with Treasuries and things like that. So much the better for the United States. And that's why I think that genius bill is going to pass. And that's why we're going to move forward. And that's why I keep harping on stable coins and the chains that are on. Anyhow, let us know what you thought about that in the comment section. Jerry, anything else to add? I think you're antsy. I see you moving back and forth. I know you want to say something. What you got?
Well, it's just, you and I came in relatively around that same period through that 2017 bull run has caught our attention. We got kind of involved. I can distinctly remember being deep in this market in 2018, studying it every single day. And it was generally this one sentiment was kind of always there. And that was what was going to be the killer app that brought crypto to the world outside of the enthusiasts,
right?
Outside of the early adopters. What was going to be that killer app? Never in a million years would I have said it was stable coins.
Yeah.
But there were people that did. And that knucklehead with the banana that we just saw with Eric Trump, Mr. Justin Sun, pivoted his smart contract platform that was sucking ass, to be perfectly honest with you, to primarily a stablecoin issuer. And look what it did. They're still relevant. They're still in the top 10, number 8 overall in market cap. And it's a direct result of that pivot to the killer app, which is stablecoin.
Which is stablecoin. And just real quick, Kraken rolled this out.
Ooh, love Kraken.
Yeah. I've been talking about more because, 2 reasons. One is because I was tired of Coinbase. And the second reason is people sign up, they get $25. Links in the description. But this is the app that they rolled out. Now it's kind of like the Venmo Global. The problem with this one is like I can send USD to I think everybody, but I can't send crypto on this app. I don't know why that is. That's how it is. So I'm like, well, it is something to note, but that's just Kraken on crack, blah, blah, blah. Kraken on crack, which I got to tell you, kind of a funny name. All right, Jerry, so we talked a lot about the stable coins and a little bit of things that are going on. Just a quick follow through for everybody who's thinking, well, what about the other altcoins, Rob? Well, this is a piece, Solana and Pudgy Penguins ETF filings added to the SEC's crypto do list. And just real quick, I hope Solana gets an ETF to go through. Not to say that it's like the best thing of all time. Didn't Ethereum get an ETF? How's that doing? Yeah. So Invesco Galaxy Solana ETF joins the list of 8 other funds that would track the performance of the 6 largest crypto. And there's a request by the CBOE would allow Pengu ETF to trade on the exchange. So Pudgy Penguins is going to be an ETF, potentially filings. I don't know if this is actually going to make it through. We will see. Any thoughts on this one, Jerry, before we move on?
Not necessarily the ETFs, but a conversation to have around stable coins is, I mean, not stable coins, L1s.
Yeah.
I do have a comment around that. And it just became very clear to me the other day, what we're watching unfold in real time is no different than what we saw with the browser wars. Like, I don't know if you remember Netscape and then the emergence of Yahoo and what Yahoo did for browsing. It was amazing. I mean, Yahoo created this ability to surf the net in a way that Netscape just didn't have. I mean, it was dynamic, and they developed within their own company these different branches like Yahoo Finance and Yahoo Games and Yahoo this and Yahoo that. And it was great. And a lot of people bet on it, right? That was it. No different than the way we think of Ethereum, right? But then what happened is Google came along and just ate Yahoo's lunch. No, they did. They ate lunch. And so I want to make the case for there will be a layer 1. It is going to crush Ethereum. Ethereum did what it did. It was great, but it's too technically hamstrung. It's too technically crippled. It cannot go where we need it to go quick enough. And so I think what we're going to see is the changing of the guard. So is it Solano? Is it Cardano? Is it Aptos or Sui? I don't know, but I can tell you what is going to happen. Ethereum is going to be the Yahoo of layer 1s. And will it exist in 20 years? Well, guess what? Yahoo exists, but it's not the predominant search engine any longer.
That's true.
And so I want people to kind of understand this, that the order that you see things today does not mean they're going to be the order you see things in 5 years.
Gosh, that's something to think about. That's why I pulled this up. I mean, back in 2010, which was only 15 years ago,
right?
You had the dominating web browser was Internet Explorer. Wow.
Yep. From guess who? Microsoft.
Yeah. And then here comes Chrome, and then Chrome beat it. And Safari. Remember Opera?
Of course.
BlackBerry Web. Holy smokes. Okay, let's go forward. What else we got? Man, Chrome has been crushing it for quite some time. Safari. I don't know what UC browser is. Chrome still. I use Brave, but that's just me. And we can see.
I'm a Brave guy too. And the reason is what they did is they literally, Brave is, if you think about it, Brave is Chrome with some extra functionality and with some features that people who like privacy and don't want to be like crushed with ads and things of that nature. No, and Brave is great.
Brave's great. All right. So then to finish this up, actually, you know what? That is going to be it. I think we're going kind of long. I was gonna bring up this Sui TPS versus what is it? CPS. Actually, man, maybe we should.
Transactions per second versus commands per second. I think it's something like that.
Yeah, and it's kind of difficult to go through it, but just all you guys got to know is follow Jerry on X. I think he posted about this. I posted about this, and it's really about the transactions per second versus the commands per second, and which one really is something to take a look at. It's not just TPS these days, and we'll leave it like that. Maybe we'll get to it next week.
Yeah.
Anyhow, everybody, thanks so much for hanging with us for 30 minutes or so. I just want to get into like the questions, and then we go from there. If you got to take off, go enjoy Sunday. It's a beautiful day. I don't know if there's any games on, but Sundays are Sundays. What do we got? Okay. Right off the bat, Shaolin's already ticked off because of Jerry. This is what we love him. Jerry, you don't get it. Ethereum with a settlement layer for Apple and Google layer 2s. If you don't get it, I'm time to tell you how technology adoption happens. So I mean, there's a good point there, actually. I mean, settlement layers versus execution layers. What do you think?
I'm going to tell you something. Do you think for 1 second those folks at Microsoft who were using Yahoo as a company standard are still using Yahoo as a company standard?
Oh, I see. As the
just because something gets adopted today doesn't mean it doesn't get replaced with something with much more functionality tomorrow. That's all I'm saying.
Jerry, you're talking about me and Shaolin's bags. So come on, give us some hope. Okay, so where do you see Ethereum going? I don't want to lose all my bags of Ethereum, damn it.
Going the way of Yahoo. I think it'll still be here 10 years from now, but it will not be the predominant layer one. It will not be. Somebody else will garner that title. Just no different than the way Yahoo's huge in Japan. It is. Yahoo's huge in Japan. But is Yahoo the predominant? No, they're not. They've been supplanted.
This is, you know what, this kind of goes back to the very first thing we took a look at with Peter Lynch. And he was talking about how he's like, I don't know where things are going to be in like a year or 2 years. Because I don't know. He goes, but all you got to know about the stock market is stock market goes up, stock market goes down. But over time, things work themselves out. So I think with this one for us to say, because I remember getting an AOL disk, putting that into my Microsoft Windows 95 computer and firing that puppy up and getting that ding dong, ding dong, ding dong, dong sound. And then boom, I was on the internet. And I was like, this is the sweetest thing of all time. This is so great. I can't believe I am living in the future. And now here we are. I'm like, what the hell was that? It's ridiculous. So who knows? Who knows what's going to come up? Maybe it's going to be them. But again, it's these chains are like no different than I think any other business that's out there, right?
Exactly.
It's like going, like I've said this many times, it's like going on the street to a new restaurant opens up. This is great. Good food, service is fantastic, reasonably priced. We'll be back in 2 weeks. Come in 2 weeks, then it's really packed and you can't even get in. And you got to wait for 10, 20 minutes. Then you come back a couple months later and it's kind of dying down. Not too bad. You come back a couple months later, nobody there except for you and just a couple of people. Then you go back 4 or 5 months later, closed down. What happened? There's numerous things that can happen to businesses, right? I don't know, maybe there was an embezzlement by the owner. Maybe they got dinged and didn't pay their taxes. Maybe they didn't go through all the different steps for sanitary compliance. Maybe they just had horrible marketing. Whatever it is. But they're all businesses, and hopefully our bags make it. That's the big thing. Let's see. Franklin says, how does Tron make money for those who hold it? USDC, USD1, the price is not moving much. Thank you.
Tron makes money. Tron, the company, makes money when they mint a dollar, a USDT, right? When they mint a tether, they take that dollar, right? No different than a bank generates a dollar from a loan, right? And then they take that dollar and they immediately put that dollar into something that will create $1.04. So it's that 4 cents that they're capturing, and that's how Tron makes its money as a company. Yeah.
There you go.
Now, you and I can't do that with our measly $100,000 or $1 million. It's not enough to support a whole company. But when you're doing billions of dollars, it's 4% of a billion adds up pretty. That's not chump change.
That's not chump change. That's very true. Well said. Well said. Donnie, everything's relative. That's very, very true. Marcus says, just joined. Is that Peter Lynch? That was Peter Lynch that we were talking about. Victor Lopez says, is Tron like Luna? Well, it doesn't have a...
could be. Well, it could be. They may open up some programs and do some stupid things and become stupid. People sometimes do stupid things. I know I've done it. Rob's done it. Well, not Rob, but other people have done stupid things.
Talk to my wife, she'll tell you.
Currently they don't appear to be a Luna.
Currently not. What was it? The algorithmic, not an algorithmic stable coin. What kind of stable coin was it?
Luna had the UST, 3 letters, UST.
Yeah. Oh no, it was algorithmically linked to Terra USD.
Exactly.
And unfortunately, algorithmic stablecoins didn't work out too well. Now they figured out like, okay, if we're going to do a stablecoin, let's just back up 1-to-1 with treasuries, T-bills, dollars. Makes sense. Assets. I think that's the big thing. And that's, I think, the difference between Tron. Now, is Tron going to, like Jerry just said, is Tron going to be here in 2 years, 6 months, 10 years? Nobody knows. So you just got to take a look at it and see which ones are moving forward. But I will tell you.
You know what's interesting is to see crypto companies like most famously Charles Hoskinson is talking about taking ADA reserves that are in an ADA treasury and having some form of those go into Bitcoin and other things and trying to create a stable coin and have it backed by. And that was the whole thing with Luna, right? If you remember, Luna was buying Bitcoin.
Yep.
Then they did weird rehypothecation, weird stuff. Have they just bought the Bitcoin and just left it alone, they might have survived some of the market turbulence, but they didn't. But anyway, it's interesting to see, like, just is Tron going to start having a Bitcoin treasury reserve strategy? Is USDT, is USDC as a circle, as a company? You know, it's going to be interesting, because if you start backing your currency with assets that beat inflation, now all of a sudden you'll never go down. You'll never go bankrupt.
That's the big thing. You'll never go bankrupt. Okay, I like that one. I don't want to go bankrupt. I don't want to go bankrupt. Crypto Bull says if you had 8 on the 11th, yes, you qualify. I think what we were talking about here is, Jerry, are you aware of what's going on with this midnight airdrop?
I can tell you I've read, but I am very much looking forward to the Digital Asset News interview with Big Pay, Mr. Payton, who's going to explain that whole enchilada. This guy is plugged into the Cardano ecosystem like no other. And so I'm really looking forward to seeing that. Now, when are you going to air that, or has it already aired?
We recorded on Friday. I aired it on Saturday at some weird time. So it's out there.
It's available. We could go see it right now.
We're going to see it now. So what we're talking about is midnight. And you guys have to be, hey, I can't monetize a video? That sucks. Bitcoin maximalist. Well, that's a bummer. Not surprising. YouTube. So when we talked about it, I will just warn everybody, if you watch that video, I am not giving a glowing review of midnight. And I am not telling everybody to do it. I think it's very risky. I know some people are saying, how can you say that? It's because I'm paranoid. That's why. And when me and Pei talked about it, we specifically said, and Pei had a good point. He's like, if you have like 200 Bitcoin, should you be connecting, your wallets to get that midnight airdrop? Because it's for Cardano, Bitcoin, Ethereum, XRP, Solana, BAT, and Avalanche holders. He said, should you be connecting to this for like an airdrop of something that might be like $20 worth? No. And we talked about all the different things that could go wrong and some best practices. So if you watch that video, just know it's not a lot of hopium in there. It's me going, hey, you got to be careful. So yeah, check that out. But
interesting. Yeah. So you're saying to claim midnight, I have to expose my private keys to something?
No. But you have to connect. You have to connect your wallet. And people say, well, as long as I got the correct website and when we connect, everything will be smooth. And I'm like, yeah, that might be true, but there's a lot of hackers and scams and things out there that they can redirect, and they can say, no, it's over here, it's over this. And then of course, who knows about, for airdrops, I remember when airdrops were very simple. You just, you would interact with, you just get them. And that was great. Now it's like, no.
Appeared in your wallet. I remember those days.
Those are good.
Yeah.
Let's see. Usually Bitcoin dumps on big holidays. 4th of July coming up, Jerry. Well, you're in Costa Rica, so you don't have to deal with the fireworks.
No,
you don't. Let's see.
But isn't it amazing how just 10, 12, whatever days ago, we were down at 98,000. I remember I got real lucky and did my little dynamic DCA element. I took all the dry powder I had, and when Bitcoin went under 100 grand, and capitalized on that. And then within just a couple of days, bam, we're back over. Now we're up at what, 107, 108? Trump's
Yeah.
talking about getting rid of Jerome Powell, which means the administration wants lower rates, which means a liquidity cycle is forthcoming, which means liquidity cycles equal much higher asset appreciation.
You know, that, first of all,
We
Donnie,
should talk about that next week.
we should talk about that next. Donnie says it well. Don't get distracted, make a plan and stick to it long term. That's a great place to end it on a very high hopium of hopium-icious notes from Jerry.
Good job, Donnie.
Good job, Donnie. You a nice, fond farewell. Everybody, if you like today's video, give it a thumbs up, subscribe, follow Jerry on X, and we will see you guys next week for the Sunday View and come from there. Thanks so much, everybody. Adios.